Why would Warren Buffett, a legendary investor who has averaged 20% over the last 60 years, invest in UnitedHealthcare? UnitedHealthcare, the company whose CEO was assassinated in the street, and the company whose stock is down 40% this year alone, and we are not even done with the year. Let's start off with when he bought this company, and then who else could also be buying and why we might want to consider the stock, and then obviously why you might not want to buy as well. But he bought this in the second quarter. Now, anytime you look at these filings, all you get is the quarter, okay? We don't get any other details, so that would be, what, April through June of 2025. Now, the stock is down 35% in the last 6 months and down 48% over the last year. It's not a good stock. Keyword is not a good stock. It might also not be a good company in terms of what they do and how they do it. But from a numbers perspective, there could be a case, and we'll get to that here in a second. But even over the last 5 years, it hasn't been a great stock either. It is down 3% since 2020, though it is still the nation's biggest health insurer. It's weird. It is a very weird case. But he bought the stock, so there absolutely could be something to it. For example, he ain't the only one buying. And you guys know how big I am on following the money. If it is a Warren Buffett or any super billionaire or really billions of dollars, I don't really care whose it is. But once there are billions of dollars moving into a stock, I pay attention. Okay, I don't always buy, but again, there's only one reason as to why you would buy is because you think the stock is going up. And if that person or entity has a good track record, it is worth looking at. So, again, he's not the only one. David Tepper also bought, and there were at least two other hedge funds that also bought around this time too. So something is going up, and you can clearly see, again, it's not good now, but investing isn't always about what's happening right now. It's about what's going to happen, what you expect to happen in the future. So let's take a different perspective. What if UnitedHealthcare is at the bottom? What if we are buying this at a discount, a super discount? I mean, it's been down 3% for 5 years. I've mentioned it multiple times how bad it's been down this year and recently. So how much further can it go, right? You can only slide for so long before it starts to take some sort of a bounce. So here are the positives for the company. And, they've gotten a lot of bad press and for some reasons. Okay, for some reasons. But let's start with this. The PE ratio, that's a price to earnings ratio. Now, we've done some videos in the past about PE ratios and what they mean and all that type of stuff. Essentially, how much are you paying for how much money the company is bringing in? For some investors, this says how undervalued the company can be. And that is the type of value investor Warren Buffett is. And I'm not saying that's the only thing he looks at or anything like that. But the PE ratio right now is 13. Okay, compared to the industry for this, insurance industry, it's 18. So it is lower, right? It is undervalued currently. That's the definition, again, of undervalued. That's what they want, right? That's what this investor, Warren Buffett, wants. It's a company that is undervalued. That is the definition of it. The other part of this is, it looks like they are assuming that the worst of this is through. And the way you're looking at it is, all right, look, everything that's going to happen that's bad has already happened. And now that the company is stained, it's beaten up, it's tired, I am now going to step in and pick this thing up out of the gutter, dust it off, and make some money. Because how much worse can it get? All right, the stock is already in the trash. You went through a very public execution, right? And it's also in an investigation currently with the Department of Justice. All right, it's bad, but it is still the largest insurer in the U.S. and it is still profitable. Like, despite all that, it is still one of the largest companies in the U.S. and largest health insurer, and it is still profitable. I think that is what they are looking at. It's like, bro, this is profit here. This is a lot of profit here. I think that is why they are buying. Should you buy though? That's the hardest part. It's the hardest part because you have the credentials of a Warren Buffett and David Tepper and all these other hedge funds, and they are buying into this company, which usually makes me quite excited. And we've talked about this all the time. Usually when they buy, sometimes, not all the times, when a politician buys, I'm like, oh, it's on and popping, I'm also buying. And I didn't look at it beforehand. I should have looked at for insider buyers, because that's really what would push me over the edge. Pause. So I'm editing the video. I went back and looked at insider buying, and yes, insider buying is huge for the last 3 months and the last 12 months. So I'm going to do more about what I'm looking at in the members only. But yeah, they might actually be on to something. So yeah, that's why you follow the money. The problem though is, because this company has been bad for so long, I can't be comfortable doing it. Now, if you, again, I say this all the time, if you want to go for it, totally go for it. But I can't. Not now. Now, a year from now, 6 months from now, I may feel differently if the stock starts to improve. I feel more comfortable after it has proof of concept. I'm not usually, and this is just my nature, I prefer to see, again, that proof of concept. I need something to say, all right, look, you have at least a year, you got 6 months, I see what you are doing for others, I need you to do it for me. I don't need to be the test dummy. I don't need to be the test dummy for my own money. I'll do it with somebody else's money, I'll do it with a simulator's money, I'm not gonna do it with mine, okay? Other people want to be the very first one to say, hey, I was on this train first. I would like to say I like to be in there early. I don't need to be on the first row. I don't need to be on the second row. Right? There are people, for Bitcoin, for example, I've been in here since 2010. That's fine. You have at it. I've been here since 2015 or so. Okay, so I was early enough. 2017, 2018. I've been here early enough, right? But I'm not going to get in here and jump in and get burned from something I don't truly understand just yet. So for me, it's a no, dog, right? We'll see. So I understand the case, but right now this is really a conjecture. So I see how it can be profitable. I understand how this would make sense because they are so large. They are still making money, and they do have new leadership, though through some not so great means, right? And I see how all the bad stuff is, behind them. I get all of that. But I'm not seeing, not that all that stuff is supposed to magically return the stock back to prominence, but again, back to prominence to win, right? We're talking 5 years. Like, the stock hasn't even been rocky or flat. It's been almost straight down for 5 years, half a decade, y'all. Half a decade. Like, that's not gonna cut it for me. So I can't get into it, but if you're looking for a stock that does pay a dividend, and UnitedHealthcare does, then I have a few stocks that do pay dividends as well as ETFs that might interest you, that could be better. In fact, have had at least a better track record more recently than UnitedHealthcare does. If you want to know what those stocks are, you can check out these videos right here.